Hi everybody, welcome back to another CYT-Crypto episode. I'll make sure I've got my microphone here. Welcome back to another CYT-Crypto episode. It's going to be another jam-packed show today. We're going to be looking at markets, looking at Bitcoin, doing a Bitcoin technical analysis. And so we have an overall market capitalization of $256 billion. That is actually the highest we've been for a while. So the Bitcoin price, $9,338. Dollars aggregated over the exchanges, and we'll just see. I'm just going to have a look at the market capitalization. We'll do it over the last year, and it's been much higher than that. It did get to 363 in June 2019, but it's coming up. It's the highest it's been for probably since September. It's the highest it's been since September. A kind of big jump there. Okay, winners and losers. We have Blockstamp up 109% on the volume of 12,000. So I wouldn't pay too much heed to that. Kick token in the top 100 is 44,000 volume, is up 48%. Ethereum Classic has gone up again. We mentioned that a couple of months ago that was going to double in price, and it has doubled and more. That's up 20%. Bitcoin is up 17%. IXRLC is up 16%. I spoke about that numerous times. Spoke about it yesterday again, saying it was going to jump, and it has 16%. Quant is up 15%. IOTA, Zcash, Nexo, Tron is up 10% as well. So all doing well. Excuse me. At the moment, so there's a lot in the green. How much have we got in the green? We've probably got about 85% in the green. 15% red, molecular future down 7%, centrality 4%, so they're not down by that much. So everything has gone up just now in dollar value, certainly. Satoshi value be a wee bit different. Yeah. So about 40% in the red in Satoshi value, but again, not that much. And this was sent from Mike. So Mike, thank you very much for this. I think this is really interesting. It'll tie in with another news story. So this is from Mashable UK. I took out a loan with cryptocurrency and didn't sign a thing. This is how DeFi space is going to go. This is how big DeFi space is going to be as well. And this, one of the kind of lending and saving in the DeFi space, is going to be absolutely massive. We're just scratching the surface just now. And this was an article sent through from Mike. So this is from Stan Schroeder. Last week I took out a loan with them without meeting anyone, signing anything, or even interacting with a human being. I also invested in a variety of assets that earn interest of up to 5.9% per year. Remember, if you're putting your money into a savings account in the UK, I would imagine in the US and Australia and around the world as well, if you're putting your money into a savings account, you're probably going to get about 1.5%. However, with the inflation being at about, say, 2.5%, 3%, depending on where you are, you're actually losing money by putting your money into savings. So this is where the DeFi space is going to come in. If you're getting 5.9%, inflation about kind of 3%, you really getting 3% back, a real genuine 3%. So this is why a lot of people are going to be attracted to this, and this is why it's going to be so big as well. And they also said I also invested in a variety of assets that earn 5.9%. I did it all on my own from my computer. All I needed was some cryptocurrency and a knowledge of how these systems work. The amounts were tiny, which is good. You need to test this first. So the amounts were tiny. The loan was for $30, and I had 95 worth of crypto earning interest. But I could have easily done the same with much larger amounts at those exact same terms. To do all of this, I was using freely available DeFi, or decentralized finance services based on the Ethereum blockchain. DeFi is one of the key usages of Ethereum, which besides being a cryptocurrency is also a decentralized app platform where most of the currently available DeFi apps reside. So I've spoken about this before. This is gaining more and more attention. The lending space and kind of obviously the saving space as well in the DeFi. And because of the underlying platform as well, which is Ethereum. Ethereum is going to go massive. It's going to go big this year. It's kind of moving up already, and I think it's going to hit $300 very, very soon. And I think we're talking about, not in 2020, but I think we're talking about $1,000, $2,000, $3,000 for Ethereum as well. This is why I'm stocking up on Ethereum and obviously Bitcoin as well, and some of the other kind of smaller projects I've been speaking about over the last couple of days and will do over the next couple of weeks. But this ties in nicely to this crypto lending crowned the industry's most profitable sector. And this is from Bitcoinist. It says the rundown is DeFi has taken the Ethereum world by storm. Messari study highlights DeFi success. Crypto asset lending poised for explosive growth. So it's doing well just now, but they're saying it's poised for explosive growth, and I tend to agree with that as well. Been saying it for months. We need to start looking at the DeFi space more seriously, especially I think Ethereum with that being the underlying kind of platform that people are going to use. But remember, they can change to another platform as well. Crypto asset lending has been a subsector of the overall crypto markets, which has been quietly growing in the shadows for the last few years. Initially, the crypto asset lending industry began with centralized lending services such as Celsius Network and BlockFi, which did garner attention from their initial success. To date, Celsius Network has reported over $4 billion USD in loans. $4 billion. And this is kind of unknown just now in the world, and it's lent out $4 billion already. This is going to explode. It's really going to explode once people and institutions come in as well. Institutions are going to come in and start saving millions of dollars and getting that 5% back per year. If they get 5% back per year, that's huge, and it's a guaranteed 5%. The way it works, I kind of explained this yesterday, roughly kind of how it works. The crypto lending platforms will lend out, say at maybe 9% per annum, and they'll give people who save, they'll give 5% per annum. So there's a difference there, and this is how they make their money as well. So it's a win-win-win for everybody, for the lender, for the borrower, for the saver, for the company as well. So that's how it's going to work. That's how it's going to explode with the bank rates the way they are just now. Crap, in other words. DeFi is going to explode this year. We're going to see a massive, massive surge in this. And this is what this is saying as well. Messari study highlights DeFi success. While the nascent DeFi lending sector is still growing, there are several DeFi platforms that have over 10 million USD in Ether already invested. Maker, Nexo, Ripple Credit Network, I think is going to be big as well. RCN, look into that. Lend as well. Aave, look into that as well. And Cred have an average rate of return of up to 15% in the last 90 days and have been averaging a return of 75% over the last year. Only Bitcoin has had a higher yearly return. And there are 349 different tokens which were studied with the same list of criteria. So that's another kind of thing as well. And they're just kind of talking about crypto asset lending poised for explosive growth. What are the other ones? DeFi Pulse, we've looked at that already this week. So I think it's going to be, it's just highlighting more and more the DeFi space and how it is going to really explode. And it's starting this year, so we need to look at those as well, and I'll be highlighting some of them. And this was the criteria Messari were using as well. I'll put a link to that. Cardano, we've seen Cardano kind of moving up as well. Cardano inches towards smart contract implementation with new paper. So Cardano revealed a new paper on January 27th in which the firm details how smart contracts will be implemented in the upcoming Gogan update. Though the system is unique, its release date is still uncertain in light of Cardano's history of delays. So we know Cardano is, they do have a history of delays, but they have a solid kind of platform. They have a solid platform, solid team as well. So I don't mind too much about the kind of delays they've got coming out. But long development cycles, that's fine. Cardano's development is divided into several eras named after famous artists and philosophers, each one with their own specific focus. A lot of people didn't know that actually. The current Shelley era focus on staking, having launched the features on Cardano's testnet in December. Next era is Gogan, which focuses on smart contracts, while the two are largely simultaneous. Cardano's official roadmap places the latter's completion in Q1 2020, so by the end of March. Indeed, all remaining phases are said to be completed by the end of 2020. So liking what Cardano is doing just now, we said last year, I said at the end of last year that it was going to explode. It is starting to do that just now. It's up 33% already this year, so it's doing really well. And this is Cardano, price skyrockets 15% after CEO Hoskinson announces new alliance with PwC as well. So the native token of Cardano's blockchain has surged in the last 24 hours. This comes after Cardano creator Charles Hoskinson announcement forging a new partnership with the multi-billion-dollar auditing firm PwC. So there's a lot going on with Cardano just now. I think it's worth looking at just now. It's really coming off its bottom. And just now it's local bottom, just now it's really coming off that. So it's still worth looking into, even though it's $1 billion market cap. Cardano's still going to be huge in 2020 and beyond. And we'll have to look at this kind of side of the stories as well. We don't want it to be all positive about Bitcoin. We'll have to look at the other side of the story. So I said Bitcoin may collapse towards yearly lows because of this one factor. So in the short term, Bitcoin may still be positioned to see further upside. This is Terry Kleps talking about. A popular cryptocurrency analyst on Twitter explained in a recent tweet that technical situation surrounding Bitcoin is currently quite strong. So Bitcoin main reason is not forming into short right now is caused by lower highs with price, small difference, higher highs with RSI. This means that despite the lower price, the buying momentum is stronger than a week ago. No bearish divergence, no short yet, he explained. And it goes on, bullish bias aside, these two resistance levels that were broken but never tested as support keep me awake at night unless we get mass retail FOMO fueled by 2017 media radio attention making these levels a thing of the past. They will get closed, he noted. So he said, although Terry is expressing some tempered optimism when it comes to BTC's short-term price action, he also recently noted there were two levels currently keeping him awake at night that ultimately led. So here's the two levels that they're talking about. And I think this is the CME, is it the gap they're talking about? So Bitcoin does dip into the mid to low 7,000 region near term. It could invalidate the bullish market structure that was developed as a result of the recent uptrend, signaling the prolonged crypto winter is far from over. So something to be wary of, and I'll put a link to this as well for you. These factors suggest XRP could see a parabolic rally towards all-time highs. Still think XRP are doing brilliantly just now. They're building a foundation, and I still think they're going to rise big time as well. Been saying that for months and months and months. It doesn't ever seem to be coming. Jacob Canfield, Ripple is just getting painful to look at when many other majors and Bitcoin itself is breaking out. Needs to push up sooner. We could see another low incoming. He explained why pointing to the below chart. Now you can see here they've got a descending triangle on this. This is Jacob Canfield, and I'll just kind of highlight this. Descending triangle. Now with a descending triangle in place in technical analysis, normally it signals a kind of a continuation of the pattern to the downside. But I've found a lot of the times with a descending triangle that it does a lot of the time break out from a descending triangle, and more often than not it breaks out, to be honest, to the upside. So we could see a big move to the upside for XRP, although people see this descending triangle as kind of bearish move. I still think, for me personally looking at it, I think a descending triangle and a break coming out of that is going to be extremely bullish for XRP as well. We'll need to wait and see. So these factors could lead the crypto to press all-time highs. So although XRP may currently be in a precarious position, it is important to note that Trading Short, a top trading view analyst, explained in a recent report that it believes it could be poised for a move back upwards to its all-time highs. It says, well, not much to be said here other than notable similarities between the two periods, December 2014 to March 2017 versus December 2017 to March 2020, and he explained while pointing to the charts below. So he's talking about the two periods here, 2014-17, 2017 to 20, and how we could see a parabolic move from there and the similarities between them. So I think XRP is poised. I know it's gone down and people are getting depressed looking at it, but I do think XRP is poised to make a big move upwards as well. Bitcoin back to acting like gold and less like stocks. So in recent time, Bitcoin has started acting more like gold again and less like stocks, which would suit the financial uncertainty of the time. This is Matty Greenspan. As pointed out by Matty Greenspan, found at Quantum Economics, the correlation of Bitcoin to gold and stocks has a pretty wild swing since July last year. This timing is essential as a correlation. Prior to July, Bitcoin was more similar to stocks, going back to the start of the Bitcoin bear market. And they're talking about this sorry, I was kind of moving down. Matt Greenspan talking about the correlation. A strong correlation would be 0.7. The correlation just now is still very weak. In the last 9 months, Bitcoin has been making a move towards acting like gold rather than stocks. And the correlation is 0.2 just now, but I suspect that will go up higher. And you're saying a strong one would be 0.7. So it's getting there. It's getting there. There's a store of kind of value and a hedge as well. And that is the news. Sorry, I've kind of rushed through that. There's a lot to kind of talk about today, and I'll still get to your charts, and I'll get to Bitcoin just now as well. What's happening with Bitcoin? 9,335 for Bitcoin. It is way up past this 200 simple moving average. You can see this, the purple line here is way past that now. It's kind of stayed above that twice now, which is a really kind of bullish sign, just to stay above that. And just to go back, it kind of broke it back in October, but just couldn't stay up there at all. This is on the daily. So we might get that kind of situation again. Remember, we look up here, kind of stayed above it for a couple of days, probably about 9 days, and then it came back down again for the 200 MA. But previous kind of session, 31st March 2019, we can see it went up about 200%. More than that, I think it was about 300%. We'll just measure it very quickly. No, it's 200%. The previous time to that, we kind of broke above it, was back in 2015. And we can see here, I showed you that as well yesterday, 12th of October 2015. It didn't go below that again until February 5th, 18th, 2018. So 3 years kind of stayed above that 200 MA. So this could either be the start of a big bullish cycle here above the 200 MA, or it could kind of fizzle out and come back down below that again. These red lines here I've kind of explained before. This has been extrapolated from the periods 2015 to 2017 and put onto kind of overlaying with today's kind of current prices. So we can expect a price rise of 13 to 13,500 before it comes down before the halving, and then after the halving, and this purple line here is the halving, we could start to go up. This is a long-term support line. Here, I'll just explain that in every video I do because a lot of people kind of still ask. This is a long-term support line which has been held in place, or it's been in place for the last 7 years. It's never really broken that. So that's where I'm kind of focusing all my attention on, as long as it doesn't really break that line and stay there. It's broken it a couple of times, but not really stayed there for any period of time. I'm still extremely bullish on Bitcoin. For today's prices, if we're looking at it, I'll go down to the macro level. We've still got this as support as well. That was previous upward resistance line for the descending channel. Still using that as support. So we've broken the 9,000. So what can we expect now that we've broken 9,000? So we're going to put in the VPVR. So we've got to move up to here. This would be resistance here. This, where we are just now, around about 9,400. We'll go, I need to do it from here. So around about 9,400 is resistance just now. So we could, we're talking really up to about 9,800. So looking for the 9,800 on the VPVR, and also kind of looking at, I'm going to go to the daily because it's much better to look at on the daily. And look for resistances. I've got kind of got no man's land here, so there's going to be resistance around about the 10,000 area, 9,900, and we've got that as a technical line as well. So horizontal, just kind of put that. That's 9,300 there just now. So we're going up another line. That's 12,000. That's way too high. So we've not got that much resistance. You can see from here, we're probably looking at $10,000. That's a psychological barrier. So we're breaking through key resistance points just now at 9,300. And then we're kind of moving up. And we're looking at really 10,000-ish as a psychological barrier, and then moving on up towards that as well. Looking at it on the weekly, what can we extrapolate on the weekly for that? So we've got 11,000, and we can see clearer where we're going next. 9,600, we have a clear one as well. So there's not many resistances up to kind of 10,000, sorry. And then from there, we can expect it to go up to 11,000, 5,000 and 12,000. So for me, it's still extremely bullish for Bitcoin just now, but we just have to keep an eye on it. We'll look at the RSI for this as well. I'd imagine this is going to be overbought. This is going to be not a good sign, I wouldn't imagine, for Bitcoin. Yeah, we're touching that 70 level. So last time we touched that was kind of hitting resistance on this descending channel, and then we came back down. But we have been up to 85 before, a couple of times. So it's not, 70 is not that high. So what you might get is a period of stability for a couple of days, kind of round about these levels from 9,000 up to 9,300, and that'll bring the RSI down. Then we could go back up again. So I don't think we're in any immediate danger. And looking at the RSI, a lot of traders are going to be looking at the RSI and say, well, it's way overbought, I'm going to start selling just now. It's not at that stage just yet, because we've been up to 85, and I would imagine it'll go up to 80, 85 before we get to the stage of traders just going, right, enough's enough just now. Time for a kind of pullback. So that's what the Bitcoin chart looks like to me just now. Thank you very much for watching today. Really appreciate your time. I know you could be doing other things, so I do genuinely appreciate your time. And last one out, hit the like button. Until next time, namaste. Take care. Bye now.